Okay, cool. I'll have a look.
See, thank you. See the examples that I've put in there. It's only if we have time.
Yep.
But I think one of my main issues is like I'm trying to use a higher time frame, but I'm still zooming into a low time frame to do it. Does that make sense? And I'm like confusing myself.
Yeah.
But
I'm with you.
only if everyone else is interested in hearing, otherwise we can do it.
It's fine. It's all relevant. I think it's really important that you guys come to these sessions with questions, because I know you have them, because you obviously outside of these sessions are always asking me questions. But I think there's certain things, and this is a really good question, that I think are good to do over a call where we can open up a chart and kind of explain it and go through the details. So yeah, that's fine. Always ask these questions. Okay, cool. Right, let's go through the question. Let's go through your actual question, and we'll look at the chart. So I'd like to go through the AB high time frame, medium time frame entry model if possible. Like this one has been frying my brain today. Model B, and the second one, model A. Happy to do whatever. No, that's fine. So okay, cool. So firstly,
do you want to look at this from an outside point of view? Now that I've not looked at it for like 2 hours, I'm like, what the hell?
So yeah, I think your structure is about right. It's not the cleanest section of price, but I think it's about right. I probably would have had that and that for me personally. These would be just initially looking. These would be my kind of swing points. Now, when you have like internal structure like this, okay, this stuff here is less relevant, because until that high, which is your last high you've marked, is broken, this stuff here is just internal. So it's a lot less relevant to the overall structure that we're trying to mark up. So I'd probably ignore a lot of that. Okay, when I'm looking at my ranges, by the way, I'm not saying that I wouldn't draw it like you have, because I would, but when I'm looking at my ranges, I'd probably ignore a lot of that, and I would just mark up these, because it's all about where structure, remember, has been broken from. Let's go and look at this. So this is USDC. Is this up-to-date price? Yes, 13th, 14th. Yeah, so it's last week. Okay, cool. Let's go and have a look at... let's load up a blank chart, so I haven't got any drawings on. Excuse me. Right, okay, cool. Yeah, so we're looking at what we're looking at. We're looking at this section. No, this section. And what were you looking at? There. Is that right? Hour, USD CHF, hourly.
13th. You need 13th, yeah. 9 o'clock onwards.
Is your chart upside down, Lou?
No, stop, don't say that. Imagine. No, there's no way. No, stop. Is it actually? I think I put in the Discord what date it was.
Is that the 13th of October? Oh, no, it's August. Fucking hell, I was going to say, I was looking well confused then. That's all right.
I thought I put the dates in, but I was like, just to...
No, you did. Okay, so it's this section of price here. Okay, cool. So I think I'm with you now. Okay, cool. So let's just work. Where have you gone up to? You've gone up to that. So spike down. Your chart looks different to mine. Why does your chart look different?
Colours.
Feed you on. No. Thanks, Dom. Right, 1 hour.
The left bit, you literally
it is there, isn't it? It is there,
yeah.
And we've got the down, and then you've got an extra wick on yours by the looks of it. You've got this down move here. Oh no, have you? Yeah,
mine's just zoomed in a bit more from where you are right now.
It's this bit here. Yeah. You've got that extra wick there, on which I don't have on this chart. What feed are you on? Are you on the Oranda feed? Okay, fine. Let's ignore that for now. Let's look at the main bulk of the structure. Let's just put our replay tool on. By the way, if you're ever looking at old price, just a bit of tip for you: always whack your replay tool on, because now when I go up and down time frames, I'm still centered around this section of price. If you don't put your replay tool on and you change the time frame, it will take you back to the future.
Yeah, so I don't think that I had it on like where your mouse is now. I don't think I went as far as where you've...
Yeah, no, I don't think you did. I don't think you did. Okay, cool. So the question is about structure. Okay, fine. So I think this is where you need to use a combination of time frames to really clearly kind of get a picture. And sometimes it's just not clear. There's lots of theories and There's lots of theories and confluences that I'm going to teach you, and sometimes the trades are found in the combination and crossover of the theories rather than them being, because the markets will often feel quite like random, and they'll feel like nothing ever looks as perfect as we draw in these sessions or on the videos. So it can be sometimes a bit confusing for that reason. So what I would say to you is that if you're ever looking at a particular concept like Model A's and Model B's and they're just not quite lining up properly, possibly you're not able to trade it at that moment for that reason, or possibly you need other confluences to help support your trading decision. That's what I would say to that, okay? This is a really difficult section of price. Now, I think we always have to come from the left, and I would personally always start on the 4-hour time frame, because preferably if I can use structure on the 4-hour time frame, then I'm going to be in a better position because it's more reliable typically. This is ranging market, and this is sometimes the risk of being quite zoomed in, is that it can be then you're looking at it and you're thinking, I can't quite work it out. When you take a step back and you zoom out, you can see that this market is actually quite ranging. So there isn't really, this is on the 4-hour chart, there isn't really a very clearly defined structure to this. And because we're not really making any new highs, because a new high would obviously have to come above this level, and we're also not really making any new lows, personally, Lou, this wouldn't be structure that I would be trading in most scenarios. And I'm saying this from a quick scan over this market rather than having a really clear idea and understanding what else was going on at the time, okay? What I can, however, see is that we have some quite heavily bullish market conditions from the left. So if I take my Pathfinder tool and I just look at my last kind of liquidity sweep, which is here, okay? Then after that liquidity sweep, we then had, some bullish structure come into the marketplace very clearly here. We've got all of this bullish structure here, okay? We then get another sweep down here. So for me, I would be looking at that as my false break trap setup, okay? That becomes, because it's an external sweep, that becomes my Model A, okay? That becomes my Model A. A Model A, by the way, is just a higher time frame false break trap, okay? I can draw my trap on. Let's just get rid of these lines. Oh, shit. Let's get rid of, come on. Get rid of these.
Model A and Model B a new thing, is it? Or?
Yeah, it's from the May bootcamp. So yeah, so that for me there would be my last structure that is relevant for now, okay? I can mark that up like that. I would always obviously confirm with my dropping down, and then in here, because now I've got my Model A on my hourly time frame, I'm not really as fussed anymore about what's happening on, and you can see the trap has done exactly its job, look, absolutely perfect. You see why I use that last up candle, look? See how accurate that is. That's why I always use that last up candle. I don't know if you're on the session. No, you wouldn't be on the session the other day, but I was talking to some of the new students about how you draw up traps. I always just use, if I'm looking at a trap overall, imagine that none of this is here just yet. I will either use a very clear and obvious last up candle before the down move that created the sweep, or I will often drag this out until it becomes untested. So see that wick there? I could, if I wanted to, draw my trap out to there, but I quite like looking at significant moves. They're what people might class as a supply zone, demand zone. Like ICT traders might class as an order block. If I can see a very clear and significant move, because remember, the banks have done that, right? They've put in a load of buy orders, which has caused a mass panic push up. Lots of traders will have bought up into that, and then they sold off with speed and impulse. So that is a significant area where lots of trading went on. And that is, I think, a significant thing to mark up. And you can see how price often reacts to exactly those levels. Anyway, we're getting a little bit off track. So this would be my Model A setup. Once I have that on the hourly, I'm kind of done with the hourly time frame. I don't really need to look at the hourly time frame anymore. I'm going to drop down to the 15-minute time frame. I'm going to look at what's happened to the 15-minute to get to that level. Has my 15-minute shifted bearish? Well, we've definitely got a false break here, or first break in this example. Have we got a true break? You could argue that that's a true break. For me, I would say not. The reason why is that there's been no commitment. Yes, it has closed below. and I'll mark it up for our sake so you can see what I'm looking at. Yes, it has closed below, however, it's immediately reversed. So for me, I would typically class that as almost like it's like a halfway house. It's not enough for me to assume this market is going short. That's what I would say, because if I go up to something like a 30-minute time frame or an hourly time frame, okay, it's closed on all of them. I would definitely be paying attention to that, but the fact that it has immediately reversed afterwards, in my head, I'd actually class that as like a second false break, because there's been no follow through to it. It's an immediate reversal, and then obviously we then get some nice bullish price action coming in. I would be assuming that this market is going long just because of the significance of this move. It's a big old bearish move like this. We haven't had any conviction to the sell-off, and overall we know we are bullish anyway. So I need a bit more than that to assume that we're going to go short. I can then look at my lower time frames. And within my lower time frames, I can then start looking for, possible entry. So we get a very nice reversal ISC here. We've got an MSU pattern that's appeared here. So we can mark that MSU on, okay? And we could have taken the trade like that. Even with a safe stop, we'd have probably 2 or 3 up to the trap, okay? First profit target comes off there. Be holding that for a little while, as you can see, and holding through a bit of drawdown, bit of back and forth, but eventually we do hit our target, okay? So the structure within here, for me, is a lot less relevant. Now, I know I've massively over-explained that, but there's a reason why, okay? You are always going to be trading from the left. And when you're going through and doing like back-testing analysis, it can be really easy to get lost in internal structure. But you wouldn't have actually been looking too much at that internal structure because you would have hopefully already been in the trade. If we are going to look at this internal structure just on the hourly, okay, we must understand that we are very likely to lose some of this structure when we ultimately go up to a higher time frame, okay? And the fact that it's kind of very noisy and up, down, up, down, up, down, for me, I'd be looking at that. If I was looking at that on the hourly, I'd be like, this isn't clear to me. And that's possibly why you were struggling a little bit on this section of price, because you were actively looking for trades within here, weren't you? You're muted.
Sorry.
That's right.
Yeah, so I think this was like the first one I had done, and I had come into like I was really just looking at 1 hourly pieces of price.
Yeah.
So when I came back here, I was looking for the ranges, I
Yeah.
suppose was the first thing.
Yeah.
And then that high that's there, the highest point, was an FB, I think, from the left. So I was trying to find where I could find that set up within that. And that's where I've made the mistake. Like, I've zoomed in too much, if that makes sense. Where, like I said, if I zoomed back out, then it would have made overall more sense than what it has.
And the thing is, right, when you are analysing price, there's always so many arguments for and against your trading decision. And what we have to do as traders is we have to become really good at filtering out the noise a little bit and just getting. So if you're looking at a market and you're going, so I'm looking at that and I understand that you've assumed that this is a false break and therefore we've got a trap. This is where you meant, right?
I think so.
Yeah.
I need to look at my picture again.
Up here. Oh, you not marked it on, or do you mean this one here?
So I was looking for this small one within the bigger one. So I was looking at 1 hourly as my higher time frame.
Yeah.
And then on the 15-minute time frame, looking for the long within that, because it was from within long price action from the 1 hourly.
Yeah, I'm with you. Yeah, I think when it gets really noisy like this. And you've got a big difference in price action as well, because that at 12 o'clock on the 14th... Oh, yeah, we're on a different section of price now, aren't we? Right, it's this one here, sorry. Okay, so 12 o'clock on the 14th. 12 o'clock on the 14th. You have got... Yeah, so when it becomes quite confusing to look at like this, if I was looking at this section of price and I can't clearly see that this is really clear and obvious hourly structure... I'd be therefore assuming, okay? So if I'm looking at this going, I can't quite work it out, what I'd be doing instead, let me leave that on, is I'd be going down to my 15 minute. I'd be dropping down a time frame to see if it becomes clearer. Now, if this becomes clearer, which obviously it does, right? Okay, then I can now confidently say that I'm looking at 15-minute structure, not hourly structure, because I've dropped down a time frame, okay, and my hourly structure becomes obviously much clearer on the 15-minute. And what I actually have is I've got two now. I've got a false break trap here, okay, which does exactly what it's supposed to do. And as you correctly marked out, just about, yeah, it does. You've also got a false break and a trap here. Okay, so you would have had two potential trade opportunities here. Now, if I zoom out a little bit on this, okay, and I look at the overall structure, this is why you've always got to analyze from the left and use your higher time frames down. So always, when you're analyzing, Lou, always start at your highest time frame possible, which is the 4 hour, okay? Draw your ranges out on the 4 hour, then go down to the 2 and down to the 1 to refine things. Because sometimes you might have a really big 4 hour bullish range, but within that, you might have the hourly going bearish.
Yeah.
What we do with that is we understand that, well, the 4 hour range bullish is one that we can pay attention to. Okay, that is we class that almost as like a master range. But within it, we have bearish hourly structure. So for us, we don't really want to be trading that market until we've had a significant change back bullish. And when it's, and I'll draw it out for you so you can see what I mean, okay? Let's say that this is our 4 hour range, okay, like that, okay? And we have had within that, the hourly time frame shift back bearish, okay? So right now, where the market is here, okay, where that red line is, hourly is bearish, but we are overall in a bullish market condition. Okay, because the higher time frame is always the one that we trust over the lower time frame. Now, what do we do with this information? Well, honestly, not much. When you're looking at this and you've got that 1 hour and the 4 hour conflicting with each other, I personally wouldn't trade that. That's a dangerous game to play. If I had a setup somewhere up here, I would, but now I'm down here. For me, I'm below my equilibrium level. I've met EPA. I'm efficient. I know that overall my market is bullish, and I've probably got other reasonings like fundamental backing because maybe the dollar's doing particularly well. I've also got previous day's candle are bullish. I'm also like let's say it's Wednesday, for example. So I'm expecting this bullish move to come back in. So I go back to the point I made at the start of the call that sometimes we might not have the perfect price action structure that we can follow, but we have enough confluences together that mean when looking at this market, a buy is the most sensible decision.
Yeah, so I think for me, because I wasn't, like, obviously because time frame, I wasn't trading it. I was on going back over like the 3.2 coursework, so the range liquidity cycle, and I was trying to pull my examples. And it was when I was looking, I was really only focusing on 1 hour down to 15 minutes. So I suppose if it was a trading day, I would have already had my overall like 4 hour bias or like weekly bias or daily bias, whatever. But because I was so zoomed in, like trying to get my examples, I've not zoomed out and looked at the bigger picture, which I need to make sure I do.
And that's exactly what can happen. But look, this is why we do these calls and we have these sessions and we do our one-to-ones, is because you're not supposed to know these answers. Okay, this is a new skill for you. I'm here to help you understand these things. So yeah, I think look, it's good. You're testing things out. You're getting confused and you're asking questions, and we're able to correct those answers. Just a final point I'll say on this, and then we'll bring the other guys in. When this situation happens, and this is for all of you now, not just Lou, but when this situation happens, does anyone know what we should do? Wait for
discount.
Wait for discount. Yeah, I mean, well, we technically are in discount now because we're any point below the equilibrium we're in discount.
FB and GB and MSU.
Yeah. On what time frame? This is a good question. On what time frame?
Usually you go for your 15-minute, but
yeah, perfect. So
FB and TV.
Because we have our higher time frame, which is the 4 hour bullish, even though our hourly time frame, this is advanced stuff. I don't teach this stuff typically in the course because it's advanced stuff, and there's other things that you'll learn just by working with me. That if I pumped everything I knew into the course, you'd be sat there for 50 hours watching videos. It's pointless, okay? So there's nuances that I have to teach you in live calls, little kind of tricks of the trade, I suppose, that if I taught it in the course, would just overwhelm people, okay? So this is a little factoid for you, okay? If our higher time frame, i.e. our 4-hour time frame, is bullish and clearly bullish, therefore we are expecting price to go long. But in order to do so, the hourly time frame has had to shift bearish in order to get into discount pricing. If we were looking at any other confluent factor and momentum lining up and all that sort of stuff, we would usually have to wait for that hourly to shift back bullish, right? Because if our 4-hour and our hourly were bearish, then we know we're in bearish market conditions. Therefore, we would have to wait for the hourly or the 4-hour to shift back bullish, right? Before we can assume that we are going bullish. We need a reversal. In this situation, we don't need a reversal on the hourly because the hourly is still technically bullish because the 4-hour overrides the 1-hour. However, the 1-hour has had to shift bearish in order to get down into discount pricing. When that happens and you've got 2 hourly timeframes conflicting, and this is the same for things like a large 15-minute range where maybe the 15-minute range shifts bearish to come back down into discount, but the previous range is large, right? And we're bullish overall, okay? Because you will have this sometimes on the same time frames as well. You will sometimes have, this is a larger 15-minute structure, okay? But it's a really big push, and we've had to shift bearish on the 50-minute to get down. When that happens, drop down a time frame and wait for that one to shift back in, because the reason why you're allowed to do this, the market is already in your direction on the higher time frame. So if we're saying we want to buy this marketplace, okay, from here, for example, the market is already bullish. So we don't actually need the hourly to shift back bullish. The difference here is internal and external structure, okay? Our external structure is framed by this high and this low. So with respect, whatever happens within this section from this high to this low is internal structure only and should not be trusted as external structure is. Because of that, if the hourly shifts bearish, we can take a 15-minute shift to get ourselves into a trade long. We don't have to wait. Let me change that to a different color. We don't have to wait for the hourly to shift back bullish. We can take a trade like this because we have sufficient support. And if we go to, I don't know how many of you guys have seen the cheat sheet, but if we go to the cheat sheet, for example, I think I posted it the other day. Okay, if we go to the cheat sheet, if my hourly is bullish and my 15-minute is bullish, then I can take a buy. Okay? My hourly is the orange line because that's the 4-hour. Yes, my 1-hour shifted bearish, but my 4-hour is still bullish. So I just need to wait for my 15-minute to shift bullish, and then I can place a buy position effectively. Obviously with my lower time frame entry model and all the other stuff that we need. Okay?
Hey, have you still got the Tuesday, Wednesday, Thursday thing saved? Or when that we did? Because I lost it. So you know, like when we were doing the buying and the selling on, and you've done the little diagram, and it was like Tuesday you wouldn't buy, Wednesday, etc.
No, I'm not sure whether I think I remember what you mean, but I'm not sure whether I think I posted it somewhere.
I want to go back through that.
It'll be in the chat somewhere. Yeah, it'll be in the chat somewhere.
Oh, I couldn't find it there. I tried, but yeah, no worries.
Let me post this, guys, in case you need a copy of it. Has everyone got a copy of the cheat sheet?
Yeah.
I've got
Yeah.
it.
Okay. If you're printing it out somewhere, yeah.
Yeah.
Okay. Cool.
I've got like post-its all around my laptop.
Cool.
I need to go and actually get some sort of better looking posters or something.
Yeah. So in that situation, that's obviously one of the things that we can do. So hopefully that's been helpful. I think it's a good lesson in, like you said, not being too zoomed in, obviously, and remembering that you've always come from somewhere. So we know that this market has an overall bullish momentum from the 4-hour. The reason why I've gone and over-explained that is because we established that structure that you drew, Lou, is actually much clearer on the 15-minute time frame, okay? And the hourly was causing confusion. Now, you go to the hourly time frame and you'd be like, yeah, but we've had a first break and a true break and a true break. Yeah, you're absolutely right. However, we are overall still within a larger bullish structure. Look, okay, we are in a larger bullish structure. When was the last? Hang on. Yeah, We're in a larger bullish structure here. And right now, this entire move down, because there's no structure to it, is just a false break trap. Okay? So, false break, trap, okay? So, although the hourly has shifted bearish in order to get to that false break, overall we are still bullish, and therefore we can take a bullish bias. What happens? Let's see if it tags the trap. No, eventually not. But you could have, and this is the beauty of using those higher time frames down, right? Is you would have taken your trade like this, for example. Okay, you'd be in that trade, you'd taken your 2R out, and once you've taken your 2R out, you're done. Whatever happens after that, if you get break even, if you get stopped out, it's kind of irrelevant. It doesn't really matter. There would also have been a second opportunity there, so you'd have made 4 to 1 out of this, obviously targeting this trap. The trap doesn't get hit. That's cool, because you've taken your profits out. This is the beauty of the way that we trade, is that we trade in such a way that we are out of the market. We don't necessarily need the whole move. Whereas other trading strategies rely on you taking that entire position because they have such a shit win rate. We have a really good win rate, so we don't need massive positions. We can get out of the market nice and quickly. All
so
right?
would that have been a model A if that pull down just before then was lower down, or if the high had took out liquidity on the upside?
It's a model A anyway, because that is an hourly structure here, and we've swept its external level. So I've marked it up lower because it was a lower target ultimately that was swept, but this is an external level, okay? And the market is bullish because, and the reason why, and although this is quite noisy in the middle here, the reason why the market is bullish is because it was already bullish to the left, and unless it shifts bearish, we have to assume. So if you ever look at a section of price like this that's ranging and you're going, oh, I don't know what to do, I can't work it out, go back to the last clearly defined structure and then make your decision. Now, what's very clearly happening here on a higher time frame is this market is shifting, which is why it's failing to make new highs and then eventually breaks down. This now gives us a true break, and this market is now shifted, and I'm going to assume, yeah, and now we get that continuation bearish, right? Okay, because now we have shifted. Yeah, there we go, okay? So, you know, I say this quite a lot. The strategy keeps you safe. If you follow its rules, okay, you trade this blindly. So this market, you trade this blindly long until you're wrong. Trade it long until it's wrong, okay? Because the market will tell you when you're wrong. There's no point in sitting here and speculating, oh, is it shifting, or it's not really making much structure, blah, blah, blah. Yeah, you can have an idea that it might be shifting, but your job is not to predict the shift. Your job is to be proven wrong. You trade it long until you're wrong, okay? And I know that's an annoying, cheesy little line, okay, but it will stick in your head, okay? And that's obviously vice versa for short, but trade it short until you get caught. Oh my God, I'm a genius. Trade it short until you get caught, all right? Just follow the structure always. Follow the momentum always, because the market will tell you when it's shifted. And when it shifts, you'll know about it because you'll see, you'll clearly have the first break, true break, and then you'll continue to make first breaks, as you can see all the way down. All right?
Yeah, thank you.
You're welcome. Anytime.